Hi, what's going on, everyone? Zachary Jensen, managing partner of TaxWise Financial Services here. We're empowering small business owners to grow with confidence and build more wealth. Today, we're going to be going over some proactive tax planning strategies for 2025. How do we actually start saving money this year so that way next year when we meet with our accountant, it's not a coulda, woulda, shoulda situation. Lots of clients that come to us from other preparers or perhaps folks that have done the taxes themselves are often surprised how much tax they owe and are looking for ways to massively reduce that the following year. It's even worse and more gut wrenching when we tell them, hey, if you had done this, that, and the other thing, if we had worked together a year before this, you would have saved a lot more money. So I'm going to go over the strategies that we give to our clients that thankfully have been working with us for a few years, so that way you don't miss out on all the great savings. So number one is leveraging business deductions and depreciation. Every legitimate business expense reduces your taxable income. At TaxWise, we specialize in making sure that you are categorizing everything properly. And if you have things that can be construed as business expenses in a legitimate way, we do so. So some common deductions include advertising, software, office supplies, travel, professional fees like lawyer or accounting fees like us, business meals, and health insurance, of course. Two things that are often missed are Section 179 and bonus depreciation. These are really huge. So Section 179 allows you to deduct the full cost of equipment up to 1.25 million, and bonus depreciation allows you to deduct 40% of other assets placed in service in the year. That means $50,000 of equipment purchase could create a $20,000 deduction right away and several deductions for years to come. You also need to track and plan for these large purchases now. So if you're thinking of buying a business used vehicle, aim for a vehicle that's over 6,000 gross vehicle weight. Think of like an SUV or a truck, and that'll maximize your depreciation. And waiting until December reduces flexibility, right? So we want to get this done now. The other bits, retirement accounts, right? So contributing to your 401k, IRA, SEP IRA, all of these accounts are incredibly powerful in the right circumstances. For 2025, you can contribute actually up to $23,500 to a 401k, or $31,000 if you're over the age of 50. Solo 401ks for business owners can get even higher, right, up to $69,000 for that employer and employee contribution. And that's doubled if you have your spouse working in the business, which of course we can help you figure out ways to do as well. That leads me to the third suggestion, which is hiring family members, also known as income shifting. This is a legitimate way to hire your children or spouse to work in your business, and you can shift income from your high tax bracket to their lower tax brackets, all while keeping money in the family. If you pay your child, let's say, under the standard deduction limit of $15,000, they owe no federal income tax, and your business gets the full deduction. Best of all, wages under, or rather for children under 18 from a sole proprietorship aren't subject to Social Security, Medicare, or federal unemployment tax. That means you could pay a teenager $10,000 tax-free, deduct the same amount from your income, potentially save $3,500 in federal taxes. But you have to do this properly. The work must be real, pay has to be reasonable. Definitely talk with your accountant or reach out to us if you have a specific scenario to go over, because you have to document hours and tasks. IRS catches onto this one if you're not doing it properly. Q2 is the perfect time to do this because right before summer here, maybe get your kid involved instead of sending them to the beach every day or something like that. They can be working in the business and helping with things like admin, marketing, or cleanup. Then we want to optimize your salary and distributions. You might actually be overpaying self-employment taxes if you're currently a sole prop or single member LLC. So if you can switch to an S Corp, this allows you to pay yourself a reasonable salary and take the rest as distribution, which is not subject to self-employment tax at all. For instance, if your business earns $300,000, you could pay yourself $120,000 salary and take $180,000 in distributions. This strategy might save you $20,000 in payroll taxes or more. And if you already have an S Corp, middle of the year is a smart time to reevaluate your compensation strategy. If you've underpaid yourself, increasing your salary to stay compliant. And if you're overpaid, considering adjusting down as long as the salary still reflects your role. And a CPA can help determine what's reasonable under IRS guidelines. Then we want to deduct vehicles and home office. If you're using your car for business or work from home, you may be eligible for significant deductions, but only if you track them properly. For the vehicle deduction, we need to be tracking the miles that you're using it. And of course, going back to that bonus depreciation topic earlier, heavy vehicles over 6,000 pounds qualify for up to $31,300 of Section 179 in 2025. And then that home office deduction, if you use a dedicated space in your home regularly and exclusively for business, you can deduct a portion of rent, utilities, interest, and more using either the simplified method or the actual cost based on the square footage of your home. We also want to be planning for smart estimated tax payments. You're likely to owe a quarterly estimated payment if you are a business owner or 1099 earner. For 2025, these are due April 15th, June 15th, September 15th, and January 15th. So to avoid penalties, you must pay either 90% of your current year tax or 110% of your prior year's tax if you made over $150,000. So paying on time not only avoids underpayment penalties, but helps you manage cash flow better. And planning for this in advance is something you should do because you don't want to get caught and not have the money ready. So you can use the annualized income method, as we just described, to pay what you actually earned by each quarter, which is useful if your income is uneven throughout the whole year. So, for example, if your tax bill was $200,000, consider sending at least $220,000 in 2025 to stay penalty free. Setting up a separate tax savings account and allocating a fixed percentage of your income monthly can help make these payments manageable and pretty stress free. So taxes don't have to be a painful surprise every April. As a high-earning person or business owner, you have dozens of tools to take control, but they only work if you act early. So now in Q2, kind of when tax season's over, you're ready to kind of make a fresh start for this year. This is the best time to set your strategy in motion. And if you don't have a strategy, we help clients with tax planning, tax strategy, and overall tax mitigation throughout the year. So again, when we meet next year, it's not coulda, woulda, shoulda. So if this sounds like you and you don't really know where to start, feel free to book a call with us or reach out to us. Our contact information is in the description below. And if you need help with that, I'll look forward to getting in touch. Thank you so much for watching and have a great day.